And welcome back everybody into another monthly recap. Today we're going to have a look at February 2024 and what happened throughout this month. We're going to see already, you can see it already, that it was a losing month. It was a minus 19%. With a just, I mean, if we're looking at the monetary value, is under 33 euros, under 34 euros, which is not absolutely, I don't care about it. And as I said, this month up until, all April, I'm just trading for the process. So I'm focused on the process. I'm focused on trading, at least one trade a day. And yeah, I see, we're going to have a look at it anyway. So just from the straight results, you can see that from 64 total trades, we only had a 19% win rate with around 2.5, depending, around 2.5 win risk to reward ratio. I think that's new, that's updated, sorry. Of course, it's a 70% loss rate and a 7% break-even rate. So a 7 tot 40 blah, 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 blah. It's a 70% loss rate and 11% break-even rate, which is a total amount of 7 trades, 12 trades of wins, and 45 losses. Of course, my expected value is negative. That's absolutely clear. We started the month with some okayish thing, but you can see that already from the second week, 7 losses and only 2 wins. Still was a profitable week, but not as I wanted. Third week was a bloodbath, and yeah, coming into the mid of the month was very, very bad. -6, -10, and yeah, this week -5, just because I got a couple of wins. But as I was saying, since it's not really relevant what I'm winning, what I'm losing, because I don't really care right now. I'm not using. I don't need this money. I don't need to be profitable now. For that I got a job. So just think that at least one trade a day. On average, I took 3.8 trades, but you can see that every single day I took a trade, and that was the main thing, because my issue was not taking enough trades. And yeah, monetary value of course changed, because at the start of the month I was risking around 2%, as you can see, -2. Then I started risking 1% to win 3%, then minus to win a 4, to win a 1. So that was some changing in the lot size. So it's not about the lot size, not about the monetary value, it's not about how much, how less, blah blah blah. It's about the process. And yeah, so I started the month. The main thing is that I started the month risking of course 2%, but I was risking stop losses of different sizes based on my previous backtesting. And at the end of the month I lowered the lot size, yes, but not even, but I was using a bigger stop loss. Instead of using a 10 pips stop loss on gold, a 5 pips stop loss, you can see over here, I was using a 3 pips stop loss on GBPUSD, 10 pips stop loss on gold, and a 5 pip on GBPJPY. Then I started doing like this, an 8 pip on GBPJPY, 15 on gold, and 5 on GU. Because after looking at the first part of the month, I saw that it might have been a little bit more profitable, but at the end of the month I saw that it was actually not. So this is the result. If I kept my stop loss at 10, 5, and 3, I would have lost this amount in pips, 35 pips total. Instead I lost 40 pips total, because with the increased size. And yeah, that's because the win, the main thing was, okay, how often do I miss out on a win because I get stopped out? As you can see over here, a few times it happened at the start of the month, but I'm not really sure. And now we're going to have a look at the setups because overall the main thing of this month was looking, taking all the trades that I could, and we're going to have a rundown of everything that happened. Quite quick, I would say, but it's quite a lot. So yes, prepare, buckle up, because it's going to be a long ride. So this, of course, is my starting thing. It's February. So at the beginning of February, what I was also using a different setup physically, talking about the computer. Due to job thing, I had to use my a Mac, another computer to trade. So that's why you see that the screenshot was different and it's not the usual one, because on Mac you cannot. I think you can, if you take a snapshot, yeah, a chart shot. I think it's a little bit different. Anyway, we're going to have a look at an overall. What is my trading? What do I trade? How do I trade? So let's just put it. What do I trade? No, let me do like that. I don't care if it's going to be extra long. I really don't care. I'm sorry for you. We can call it trading plan, but okay. So I want to come out from this with some clarity, and so trading plan. Okay, what do I trade? What are my confirms? What is the average stop loss? Stop loss. Okay, what is the average movement? What trade management should I do? Average win rate times entry trigger, etc. So basically I want to really have a clear understanding of what I do, and because it's sometimes it gets a bit shady, it's a bit blurry, because I don't know what I'm doing. Where should I place my my buy limit? Should I enter manually? Should I enter a buy stop? Should I enter a sell stop? So just having a rundown of my setups, and I want to sort of have a better understanding of this part. Okay, so let's get into it. So this is the start of the month. So we're starting from February. This is GBPUSD, and you can see how this is early, right before New York Open. So this is sort of the time. What we see is this: we have a clear-cut area of interest. With this area of interest, we have two previous higher highs that are creating a resistance. We have a small confirmation of this resistance, because you see this bearish, we see a reaction at this area. Then what we see, we are on the 1 minute, I would say. I guess we are on the 1 minute. I don't know if this was still on the 20-tick chart. I'm not sure. Anyway, whatever it is, we see a single candle breaking above and closing very bullish. Then, so what do we do in these cases? My entry confirm is, for me to enter, is this. The rules are: price is breaking above. So price is breaking above a clear resistance. This is just for this bullish case, so that's bear with me. So price is breaking above a clear resistance. Okay, adding automatic bam bam. I don't like this. Okay, then okay, price is breaking above a clear resistance. We have one or many 1 minute candles, no, not even 1 minute candles closing strongly bullish. This can be seen on the 20-tick chart, which is in the middle of the 1 minute, or on the 1 minute itself. Can be on the 20 ticks chart or on the 1 minute itself. During high volume time, use the 20 tick confirmation. During regular times, wait for 1 minute to close. This is sort of, oh no, okay, this is basically depending on the high volume or what I feel the volume and momentum is. Also, there's something that I can really try to understand better is the entry at support. So price is trading bullish, yes. We have this possible confirmation, we had this possible first trade idea, would have been, I think, a break-even one, because the price needs to grab liquidity lower. So where will it grab it? So we are here, and yeah, this is basically a 75-80% of retracement before pushing up. This is, I used to trade also this as a pullback, end of the pullback, because sometimes I see that the price is reacting at these lows, but maybe I would have taken it at these lows. If I had a buy limit over there, I would have hoped that price would grab liquidity there. So maybe that it will cause some confusion. So I wait for the actual continuation above, unless I get some intuition or something. So anyway, I trade this. This can be on a ticket chart, and that's the clear resistance. The entry order should be at the previous resistance level or top week. 1 minute. So where would it be placed in this case? The sell limit, the buy limit, exactly here. I will place it at this level, because you see that these are the candle bodies and it's the top week. So if I see a possible rejection point, it's here. If it reacted there after this one and went straight up, I could have not done nothing, because it's not like, oh, I placed it lower, whatever. No, that was the single price area that I would have taken the trade from. And yeah, that's we're going to see different examples of that, because oftentimes that's not that's another thing. So this is 83, this is 75. These are 8 pips. I think it reached 85, so that's, if I took the screenshot, because it reached 10 pips. And so yeah, for sure my average, it's at least 10 pips. I want to also, sometimes it goes to like 7, 8, 9 and then goes back down, but depends on the minimum. It's a 7 pip if it doesn't go at 7 pips, that's okay. But that's also something that I could think about. It's about, my question is, should I take partials at 7.5 pips and leave the rest run to, for example, 20? And now I'm specifically talking about GBPUSD. 7.5 pips. If I use a 3 pip stop loss, that's basically a 2-to-1 risk to reward ratio. Because if you think that when I lose stop loss is 3 pips, the actual loss is the same, is 3.7 pips because of the commission. TP is 7.5 pips, the actual is 6.8. So you see that it's basically, it's even less than a 2-to-1 risk to reward ratio for this part. But if I can have, due to this 7.5, a high win rate, that's okay. That's still profitable. For as a starter, maybe I should not really focus that much on simply like focusing on how to maximize, but how to just make money. Start having cash flow. Start being profitable, and then with time I will adapt. So that's something that I really want to focus on, and have what's to say, something in my head about it, around it. Yeah. So anyway, this is the picture perfect setup. It can be better. This absolutely. And we're still at the first picture. Then we have the second one. This one, I entered. In this case, I entered manually. No, I entered with a sell stop over there. Absolutely great. And the thing is, I saw this one. I should have entered there, for example. My first entry should have been here, because we have a clear support, because it's this pivot point, and we have so we have the candle breaking below, and then we have a retest. Let's just see if that would have been a loss. I guess so. This is on gold, 2035. No, yeah, I mean, should have not been a loss, because if the entry was at 2034.1, this is a 1, my stop loss will be at 2035.1, so it's a little bit above. With a 10 pip, should have not been a loss, I would say, but it happens. I entered when I saw the further correction. Okay, grab liquidity, okay, breaking below now. Now, the trade that I took was this. Price is breaking below these lows, and then I don't know if it's a 20-tick chart or 1 minute, I repeat, and I had a sell limit over there, got tipped, and then pushing down into the into a win, 30 pip win. So yeah, that's basically the same setup. Okay, now let's see. So this one is another one. For example, here I repeat, I don't know if this one was on the 1 minute or not. But yeah, it doesn't look like. It looks like this is a 20-tick chart. As you can see, if this was the 1 minute chart, my entry should have been here. That's because here, if I'm using my rules, I don't have yet any clear candle breaking above. The first clear candle closing above is this one, but so after seeing this, I should place my buy limit over there and then wait. This entry, yes, should have been a win. It's a winning setup, absolutely, because it only goes 4.6 pips of drawdown from here and then pushes up those 30 pips. So absolutely, absolutely great. We have a clear cut resistance, as you can see. Gets broken, gets retested. We are doing the New York session, and then it goes into profits. As simple as that. Now, this was still on gold. You can see it, same thing. So here you can see that it's would have been a loss. Anyway, here you have this same thing. We have high volume pushing above. We have candles closing above the resistance, and then that's where we could enter. This in this case with the high volume, I really like to take the trade at this previous area. This is the case where, okay, if I have a bigger stop loss, like a 15 pips, then I should be using this reference, because I don't want this to be tapped. If we're talking about the 1 minute, to be tapped and then continuation, and then it pushes up. Since we are on the 20 tick chart, it's okay to use the most candle bodies area. You can see very little drawdown, and then we would have the continuation. So the rules I'm going by because it's absolutely the same. We have a clear-cut resistance, and when we have one or multiple candles breaking above, that's the winning thing. You can see how here, very low quality, yes, but how GJ will tap exactly the top of this level, and with the spread might have not been activated either. This is on GBPUSD. So this is one thing. I was using this reference from before, and this is liquidity grab at the London Open, pushing. Now we have some volume, so I didn't take this trade because it was still early, and I was not really trusting that the continuation. And also I think I didn't like this candle size, but this is something about, I think, intuition experience. But anyway, if I wanted to take the setup, this one should have been. The thing is that it was a single candle, maybe. I don't know if it's something that I should be considering more. But yeah, this is not the setup. This is basically, this is not my setup. If I wanted, I should have waited for this entry. Yeah, this one either, because we are still not breaking above these highs, and the candle bodies are quite thin. So this was just about some more knowledge about, okay, we are grabbing liquidity, we are failing to make new lows. Look at this nice and bullish candle. We are breaking and retesting the same PSA that we were using before, because if this goes on the left, it's because we add more price points. We add more stuff like this. Bam, 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 bam. You can see. And yeah, then using this one was a small fake out. Seeing that the price is unable to push below, and we have London volume coming in. That was in anticipation of the possible continuation up, which is okay, but anyway. So this was this. Now we are seeing this very strong bearish price action, rejection at the highs. We have this break below these lows. There is not much of a price action that we can enter easily over here. Might be something a little bit more aggressive. We have multiple entries over there, but after seeing this setup is about, after bouncing from an hourly support, which is this area, we have multiple times where the price is actually forming a structural market. Very structural market structure. So you see that price is getting higher highs and higher lows. This is also a tricky thing, because okay, when and when not do I look on the left hand side? Do I just care about this price action? Or I look that on the left hand side we have this PSA, so maybe I should just wait for this breakout, or what? I don't like it, because on the lower time frame as a scalper, I can take advantage of these old ranges. So this entry is clear. So after strong rejection or failure to break, price reverses and creates a structured price action with higher highs and higher lows each. No need to look on the left unless it is a strong PSA, strong and relevant. Okay. About the average stop loss, you can see that it's very, most of these entries, and you can see that these are seen like this, but sometimes I see them live, very small. So I can either have some trade management. Should I avoid the break-even rule and adapt the stop loss when it is moving already? So for example, for this question is, should I, instead of having the break-even rule at 20 pips, at 5 pips on GBPUSD, okay, let's say that I take this entry, I enter over there, this is my entry. When I see this price action, instead of having the stop loss there, I put it over here. Because maybe now the price will come down, tap again, and then push up. But if I have the stop loss at break even, I get stopped out. If I have an adapted stop loss, then I don't get stopped out. Let's see. We already saw that. So this one very difficult. This is the situation that I was saying. If I have my my sell limit over here, because it's the candle body, it's also this lower wick, this does not get activated. If I have it here, it does not get activated. If I have it at the bottom of this one, it doesn't get activated either, but it's most likely. So this setup is a little bit sketchy because it would not get activated as sell limit, but it's a clear breakout and just a very brief retest of the area. This one we saw it already. So you can see, I think this is, no, okay, it's not the same. Anyway, you can see how we have this PSA with the bottom of the wick, also this area over here. So bottom of the wick, this pivot area. So in this case, that's a tricky question, tricky thing, because we can still use this old PSA, yes. And if we had a sell limit, would be missed over here, but it gets activated there. Or maybe I got triggered, 82. 76 is 6 pips, so it goes back to break even. So this is one of the things. But also if I went to 6 pips, my stop loss would have been there and get tipped out. The thing is, now, should I adapt? If I miss on this, should I adapt and use these ones? So yes, I guess. It will probably still be a winning trade. But yeah. That's when sometimes with a 3 pip stop loss, this one would be stopped out, while on the 5 pip stop loss, it would have been absolutely fine, and then pushing to 10 pips. That's one other thing. The question is, should I leave the pending order on if it missed the first entry? How can I avoid getting missed? Getting skipped, I would say. Larger stop loss and worse entry point. Okay, so that's what I was saying. Instead of having a smaller stop loss and getting sometimes slipped, because you will see now, having a larger stop loss and having accepting even a worse entry. For example, instead of having the sell limit at this area, having it here, so that is more likely that it gets activated. And if I had my, let's say, my first entry was, my first sell limit was there with the stop loss 3 pips over there. Maybe I decide to have my thing over there. And since I have a bigger stop loss, the stop loss is even there or even higher. I'm accepting a bigger loss. You should see the difference. But I'm giving it more range to get activated because I prefer to risk more, but to get triggered more often than to get missed out because I wanted the perfect entry, because with the perfect entry, with such a small stop loss, I need a better entry. Otherwise, if I can have a 3 pip stop loss over here, the entry is over there, and the 3 pip stop loss is there, because then if the price is actually testing here, it's very likely that I get stopped out. So that's one thing that I have to understand. This is of course on gold, but the same thing. Instead of having, maybe now this candle taps here and then pushes back, with my sell will not be activated. So maybe I have a bigger stop loss, but the limit is at these lows, so it gets activated 100%. So this one was at 20 pip, 36. No, it's a 30 pip TP. Okay, this was an actual entry, quite unlucky on the backtesting session. Okay, and this is the same thing. So we do have a clear support. Maybe it's even a little bit higher. Price is actually breaking below because we can see these strong sequence of events and bearish candles. We have a retest of this area. That's where I place my sell limit. Gets activated. The drawdown is absolutely fine. We don't break above that highs, and we go into a TP after that. So as absolutely clear cut trade. This one was the trade, but was very lucky that the 10 pip stop loss did not get activated. Nice. I don't know how. Don't ask me how, but you can see how the setup was good. We have this area, this area, this area. That's where I place my sell limit. Gets activated, draw down, but then I have the continuation down. I don't remember if this trade would end up. I know it's a backtesting one, so I don't remember if it goes into TP or it goes back. Same thing, very, very nice trade idea. Price is breaking above these highs. You can see clear cut breakout and smaller, slower pullback. This is on GBPJPY, and this is the backtesting session. But yeah, set buy limit is over there, and it would just push up nicely. Same thing, clear cut below these lows, just placing my sell limit. It gets actually a little bit of slippage, and then it pushes back. This one was an actual buy stop. In this case, I wanted to have a buy stop above this high, so buy stop was over there, I guess. Gets slipped a little bit. Lucky that it doesn't get triggered, but it then pushes up. Also, you can see that how above these highs, there was another retest area because we see multiple candles breaking above, and that's where I could have my second buy limit for the possible continuation further bullish. This was an actual trade that I took. As simple as that. Order block, multiple confirmation of this area, sell limit still safe with 10 pips, and we push down to 30 pips. So here you can see that only this is on the 1 minute time frame. You can see how I'm using the actual top of the wick to have the area, because otherwise I might get missed, because on the 20 tick chart this is a relevant PSA, so it's that's luckily that the price will react there. Same thing over here. So now this is the same. This was a loss, but it's a perfectly fine loss because you have all this PSA, very nice candle breaking below, and then gets a retest. Actually goes almost at 20 pips, I would say, 25.6, 27. So no, let's add 28. It's like a 16 pips instead of a 20 pip, and absolutely fine to lose over there. You can see here, this is where sometimes I get the confusion. Do I want to use this area, or do I wait for the price to get a little bit lower? That's something that I don't have the answer for. Clear break below these lows and retest. Luckily that the first one is not going to 20 pips, and before pushing back, because you can see that it will be tapped into a break even and then goes into the TP. So this is one of the situations where, okay, do I want a break even rule or not? Okay, yeah, further continuation down. This is an actual trade. Yes, this is an actual trade. Price is breaking below these lows. Now we are on GBPUSD, breaking below these lows. Bam, bam, we have this area. 1 minute, 2 minutes candles closing there, sell limit. We survive the drawdown and then pushes to 10 pips. You see that it will go basically to 15, 16 pips. So that's another thing. Okay, so this one was anticipation and then a continuation. Why? We are not looking at the left hand side. That's because we are reacting at a very interesting PSA on the top side. We are retesting, we are breaking below the very aggressive bearish candles. We're breaking and retesting, possibly retesting this area. So that's where I will place my sell limit, and you can see how from this level, bam, 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 it will go straight down. Bam, yes. And this one, another possible entry. This one, as you can see how sometimes the sell limit is important. That's because if you place the sell limit anywhere there, would have been okay. If you only place it at this top, maybe you get slipped. So another thing, this was a possible buy. You can see how we have multiple PSAs. Now we are failing to break belows. Break below, we are doing the New York Stock Exchange time. So the thing is that we only, if we just look at it, I don't know if it's going to be a loss or a win. We have one single 1 minute that from these lows push up, and then we have this candle which is not showing that strength, that much of a strength, because I mean it's basically a retest on the 20-tick chart. This one would have been so we would have this one closing bullish, then we have a bearish one, and then a bullish one closing a little bit above. You can see that it closes with a little body, but the following one, it's bam. I mean, I don't know about the following because at this stage I should already know if I want to place a sell limit or not. If I'm using the 20-tick chart inside this 1 minute candle, that's already placing and activating the sell limit, because we have this candle bullish buy limit and it gets activated. Now I don't know if this drawdown will function or not. This entry was, I think, was more of a intuition one because there's no retest whatsoever. This one, yes, you see that's a very clear cut retest of these eyes. Bam, bam, very nice retest, and then a continuation. The same, you can see how here it would be crucial to have the sell limit at this lower wick, but even a little bit below that for a possible entry, or now waiting for example, a retest of this area for possible continuation down. Sometimes it will retest the hourly. This one will not be retested, will just push here and then continue down. And Okay, 40 minutes, that's okay. This, yeah, this is exactly the same. I'm waiting for, maybe I am with a buy limit over there, but it just retests the hourly and then continues up. So that's something that okay, when should I adapt? And seeing, I'm seeing bam, bam, this 1 minute candle, bam, 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 just pushing. When should I, okay, it's clear cut volume, let me place a buy stop. I think that's going to be with experience more than anything. And yeah, I don't know when I stopped recording this screen. Okay, I hope not so long ago, but anyway, yeah. And I don't know, when did I... I think, yeah, a long time ago then. When I was writing... Oh no, okay, yeah, it was entry point, yeah, quite a long time ago. Anyway, yeah, that's okay. And we have the continuation up. When should I just end? Okay, look at this size of the candles. Look at this, the size of these candles. Bam, 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 bam. Let me place, if I don't get activated here, let me place a buy stop over there. Because the volume, the volatility is so strong, why should I miss out? That's another thing. Anyway, very nice entry. GBPUSD, you can see very, very good retesting of this area. A little bit of drawdown and then kind of pushing up, stop loss at break even. Now I don't care. We are, I think, already at around 7 pips or something. For 7, for 2, this is for 1. Yeah, basically 6-7 pips. Yeah, it goes to TP. This is one thing. Okay, why should I take out at 7.5 pips the partials? I'm missing out on this 10. But yeah, that's not how it is. This is, I think, is still on the, I don't know if this is on the 1 minute chart. For example, here the entry should have been, where should it have been? If we have this reference, we don't have those very nice bullish candles. But if we look at these candle bodies, then we have some bullish confirmation before the retest. But yeah, very tricky. And then the possible continuation up above these highs, which is, as you can see, was above these highs. So you can see that is continuing. 56, 59 should be at least 5 pips. So at least it's a break even. Yeah, look at here. It's a 10 pip from there. Absolutely nice. This is on gold, very slow during London volume. I remember it. GBPJPY giving us the best retest. Bam, bam, bam. Even an entry over there would be fine, especially knowing that GBPJPY has some spread. So when the sell is here, the buy might be there. So that's okay. That's good to enter. And possible trade idea. This, for example, would not be activated. This break-even one, but if it would, yes. Then we have a possible correction. This is something that happens quite a lot. We have the possible continuation below these lows. We have strong bearish candle and price action. Very nice, strong 1 minute candle closing below. If I am using this as a possible reference, I'm waiting to enter. But most of the times, sometimes, yes, I would avoid a bounce because my price might do that, double bottom and then continue up, yes, but doesn't mean that it's going to do that. Because maybe if you look, because what I mean is that maybe we are this bullish side, price is just making a bearish pullback, but when it reaches 75, 61 or 75%, then it's going to continue the trend. But we don't know that. Yeah, that's exactly what happens. You can see absolutely spot on because price simply look. I didn't know that it was this situation, but it was this situation. Yeah, you have exactly from this bullish price action that we saw. You remember this one is the one that we were looking at previously. This is basically a 50-60% retracement of this bullish move, and probably if we go from the down there, it's actually a 50%. and maybe I'm taking this loss, but it's just a high time frame pullback to a better buy area and then a continuation up. So that's very interesting. But as a scalper, okay, I might take that loss, I might do whatever, but you can see that I can take this buy because we have this clear cut price sensitivity area. We are breaking above the hourly, and nothing is blocking me from taking this entry, from having this buy limit over there after seeing this bullish price action, and yeah, at the same time not caring about this because price might break, retest and bounce from there and reject that area, those previous highs. So what do I think? I think that, okay, this is 7.0. Do I have at least 5 pips to reach there? Yes. Okay. So even if it's now this next candle are just pushing down, I have my stop loss at break even already. So that's also something that having the stop loss at break even saves you, because this rule, okay, I will take this trade even if I don't break out. Maybe I'm betting on the breakout because of course the TP will be above there. But if my entry is there, and my TP is there, I'm betting that the price will break above these highs. But I know that even if it fails, since it's a 5 pip, 6 pip range, I will be at break even. Now this one was on GG, I remember it was very fast with the news. What about this one? I don't know, but the trade idea is okay. I don't need to focus on the result. I need to focus on if the trade was good or not. Is this good for the actual, from my metrics, from my setup rules or not? I don't care about the result. Very fast, but you can see that there's a retest of the area and then it will push down. Now betting on this thing. Now this is another thing. What do I want to have as a trade idea? This retest or this retest and then a continuation up. So that's also something that it's quite tricky for me. Which one to choose? I don't like, for example, I don't like to use that. I would prefer to place a buy limit over there, and we don't know the result. Here, one of my multiple sell limit missed, but you can see this. I think it was on the 1 minute. No, this is absolutely not on. This is on a 20-tick chart. You can see how my sell limit was very ambitious. Why here? Yes, I have the line there, but why there? When the last pivot, the last price point is this. Look, I'm missing out on a trade because I am just too greedy. I want the retest to be perfectly there, but you can see if I place it coherently with the price action and the market structure, I would have been activated here or there, and then I would be part of this bearish price action. Not because I missed out because I didn't want to pull the trigger, but because I was a little bit too ambitious. And that's what I'm saying. If I place it over there, and if I'm scared to place it over there because maybe the stop loss gets too tight, then okay, just have a bigger stop loss. Here, is it the same? Okay, yeah, this is the terminal later. It does get activated, I guess. I think now this is activated. I'm not sure. Because after seeing this bullish price action, 20, I know, yeah, this is way below. Okay. And I think it did not get activated. Am I understanding correctly? So, but I mean, I think it didn't get activated, but you can see how even here, why the sell limit is there and is not at these lows. Look, all these lower wick, pew, pew, just have it there. So you are making sure that you have all these for spread or slippage to get activated. This one absolutely, yeah, this one was missed by less than a pip. Is the one that we were looking at. 202 would have been a break-even trade, I guess. 202. Yeah, 202 flat. And this is maybe not even, maybe it would have been a loss. But yeah, I took this win then because price would push down, do the same thing, and then go those 30, even 35 pips. I remember that this one, I wanted to have the stop loss, the TP below, because if it breaks below here, if we go down, this is another miss entry, I guess, where my stop loss, my entry should have been just there, here, wider. Just use the candle bodies, and that's it. And that would have been a win. Yeah. Just looking at the price going without me, after I place my sell limit, it's very hard. And now next one is below these lows. You can see very nice clear-cut area. I don't remember if, yeah, this is a 20-tick chart, lot of price action, and I left it there. I said, okay, yeah, that's okay. I missed, also should have been there probably, would have not changed anything, but very good. If this was 1 minute, this would have been an end of pullback setup, but since it was a 20-tick chart, it's a break and retest for me. This continuation, this is very fast because you see we have one candle breaking below these lows, and it would be very fast to place this sell limit over there. This one got missed by quite a few, and you can see how simply I was placing them too far away, too further away. That would have been activated because it's also the lower wick, so it's a PSA. And then of course when I do that, I usually tend to take the second entry, and it oftentimes is a loss. Another missed one. This one was unlucky. I don't think that having it there, yeah, would have not changed anything. Quite unlucky. Bam. Okay. Yes. Yeah, this is the same. If I would have been activated over there, this one would have been a break-even trade, because if I left the sell limit there, this is a win. And just have a look at 14th of February. Okay, yeah, we are around here. 14th of February at 11:59. Okay. So we are here, we just did 71, we have all these. Okay, yeah. So we are going to stop for this morning. We did basically 1 hour, yes. And we're going to continue this afternoon with the following, with the next setups, okay? Hope you guys enjoyed, and see you later on.